The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials down 258. NASDAQ is down 70. S&Ps are down 23. And I can blink, and they're going to be down another 10, I think.
I know. You said 258. By the time you got the words out of your mouth, it was 248. It was 2say. You know, it's jumping, man. It is jumping.
Big time. Gold contract's down $1.10, trading at $12.86. We have silver flat, $15.03. Light sweet crude up 13 cents, $56.35 a barrel. And notes and bonds, bottom line, folks, is pretty amazing. 10-year note up 11 ticks, 122.16. 30-year up 24 ticks, 145.20. And King Dollar just took out its high, up 486 ticks, trading 97.285. The euro is at 112.36, getting smoked. The pound is at 131.04. The yen is at 111.60. And the thing that is amazing, folks, if you happen to be in that metals market, or the gold market, bottom line is the dollar is breaking highs. Gold's only down $1, and the actual gold equities are up.
Okay.
Pretty wild.
Yeah.
Mario Draghi, everything is coming.
That's what I was going to say. Gold might be getting a little bit of that safe haven today because something's going on, man. As
well,
in your, yeah.
There's no doubt. You know, what you have right now over in the UK, in London, in Europe,
yes,
you have the DAX down 1%. You get the FTSE off 0.8%. The thing that's so intriguing is that, you know, Draghi came out and said, listen, you know, growth is going down. And, I mean, I think the whole world knows that the euro's been going down for quite a while. But this is a big number.
I was going to say, to be fair, they didn't know in December, I guess, though, right? I mean, to go from 1.7, that was a big, you know, their forecast for the entire Eurozone. 1.7 is what they said in December.
Yeah.
We're just the beginning of March, man.
It's
It's basically 2.5 months, right?
Right.
To 1.1.
Right.
Almost cut in half. Right?
Right.
I mean, just dramatic. So, of course, you're going to have American companies doing business in the Eurozone. It's going to affect everybody, let alone the currencies that we saw those moves.
And what happens here, this is what's so important to wrap your head around. When we're going downtown and the European Central Bank basically loosens up,
yes,
right? Most times you see the market pop.
Okay.
And when this happened this morning, I could see that Europe couldn't even get any traction. I says, this is unbelievable. Because the bottom line, in that article you just had there too, bottom line is that they're going to give the banks more money at a cheaper rate to give it out.
Yes, right.
And that's quantitative easing.
Yes.
You know, he didn't want to say it, but that's exactly what it is. And guess what? The market is saying, guess what? Well, the small caps said it yesterday, folks. If you want to see the correlation, the small caps are pretty amazing. That broke apart first. S&P's breaking today. These currencies are pretty...
Yeah, we can dig into it more. And I think it was just kind of just how dramatic the cut of the Eurozone was. It was a little startling to go from 1.7 to 1.1. If we ever saw, you know, our central bank, Powell, come out with such from a December to a February. Now, we had kind of that shift from rate hikes, right? But we didn't see a revision in growth over 2 months from 1.7 to 1.1 or something.
Right.
Yeah, so this is dollar index top left, quite a spike, right? Yeah. With all that action, about 96.8 up to 97.3. The euro, of course, I said in the update, almost fallen a full penny from 113.20 down to 112.36. That yen, 111.59, and the pound pulling back as well, 131, basically.
Yeah.
Yeah.
So take a look at this, folks. This is pretty cool. I was looking at this. I actually had this in Market Insights this morning. So yesterday, what you had is that you had the Russell 2000, basically.
It's quite a bar.
Oh, it barreled down, folks.
Yeah.
And the volume expanded in a large way. Now watch this. When you take this, because I had remembered this in September. So the Russell 2000, I'm going to put this up. What had happened is that the Russell 2000 actually had topped out in September versus the S&P in October. Now, when you're looking at this, it's the Russell is the white line. The S&P is the green line. And what you can see, that was at September 21st.
Yes.
The Russell had topped out. Well, you have to go all the way over to October 3rd for the S&P.
Okay.
Now, it's going to be intriguing today, and if we'll go to the IWM for a second, you're going to see how fast this came down yesterday. I mean, that was a move with conviction. Look at that, that spike.
Yeah, you go from 156 down to 152.88. So even a $3 move, talking about 2%.
Yeah.
Big.
And you got back inside the lower range, you know, the three highs here.
Yep.
So it's going to be intriguing today watching, you know, this S&P, because now the S&P is going to get a move. And that's also, you know, underneath this level. So there's a big action all over the place. Gold contract, we take a look at gold. Gold out here, the low out here today is 1280. You're at 1285. It's blowing my mind, actually, that gold's holding up so well.
Yeah.
It really is. It's like, okay, you know.
Yeah, and that's what I said. I think it's just so startling. You know, this isn't like an isolated news bit.
Right.
To have the entire Eurozone. This isn't Germany. This isn't, you know, the UK.
Yeah.
This is the entire Eurozone, going from 1.7 to 1.1. Maybe you're getting a little bit of out of the equities and into bonds, and maybe even into some gold with the way they're moving.
Oh, yeah. And what we will do, folks, at the break, I'm going to find, just on my way in, they were listening to Bloomberg, and they said that, listen to this, the German Bund, okay, which is the 10-year, right?
Okay.
Just gave up 59% in one day.
Okay.
Now, it's trading at a very small number.
Okay.
But if you did own bonds, that's what just happened. So I can't wait to bring this chart up, okay? Because, you know, when we go over here, well, let's see, WB, I'll do it this way. You're going to see that, actually, we can do this. That's the...
Yeah, well, I can already see that, yeah. So the yield is at 0.07%.
Right.
And it was at...
Look at that move.
Yeah.
Oh, my God.
So my only hesitation is when you talk about percentages in really small numbers, it tends to skew things.
Oh, I know that.
I'm just putting it out because it's also, the other way to say this is that it ticked 0.07%.
No,
is
I
the
understand
only
that.
change,
But think about something.
Yeah.
You're talking about hundreds of billions of dollars of those out there. Just like us.
Yeah.
You know, so it's real money. It's monster money. You know, you're on the wrong side of that.
So
it's like,
just to go, I mean, there was a similar move up here, similar down move here, similar move up here, similar down move here, similar down move here, similar up move here. That's not as startling in my opinion as, you know, it's 0.07%. You were already just getting, as in you're already getting only 0.15, less than 1/4% on your money. So it's not, you know, you're getting 0.15, now you're getting 0.07. You're basically almost making nothing no matter what, right?
yeah, because look at this. So this is the 10-year. The 10-year.
0.07. You go.
Yeah.
Yeah.
Right.
Yeah.
That's unbelievable.
Yeah. And you can see though, just to follow.
And we're at 0.2. We're at 2.65. That's
right.
why.
That's why I'm saying so that would be the same as ours going from 2.65 to 2.58. That's the only move they just had. That's all I'm illustrating. They went 0.07. That's the point.
Well, no, it got cut in half.
Right. Right.
That would make our move 1.3.
No, you're talking about percentages. I'm talking about the prices.
Oh yeah, no,
but that's what I'm saying. That would be like our yield going from 2.65 to 2.58. That's what I'm illustrating. Right? Does that make sense? That's what it is.
No,
that's what it is. That's
59% of.
No.
Of
See,
265.
I'm talking about price movement.
Yeah, no, I get the price movement. Yeah.
Well, I get the percentage movement. That's you know.
Dow Industrials right now up down 268. Nasdaq is off 74. S&P's down 24. I'll come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This market's catching some steam here.
It sure is.
You get the Dow down 290, Nasdaq is off 81, S&P's down 26. So percentage-wise out here, folks, you get 1.1 on the Dow, 0.8 in the S&P, and 1 on the Nasdaq.
Yeah, let's see where the VIX is real quick.
Yeah, I heard that update.
Oh, it's pulling back down. No, I was going to say. What are we looking at? A 5-minute here? Yeah, we are. Is this going to be delayed? Let me just check this on, because it seems like it should. I think I'm seeing this slow. Something's going on here. That's only 9:45. We'll check back with it.
I can put it up on the Bloomberg.
Go for it.
So the high, the high was 1781 or 17. Yeah, you're
okay.
1722.
Yeah.
So it launched the highs of last week. That was last
Right.
Monday, I think, right?
Right.
Yeah, right.
Which is interesting because that was quite.
That was Monday.
Yes, because that was quite a sell-off.
Right.
That we rebounded from.
Right.
But right away today, I said to you, maybe it was during the show or during one of the breaks, that this VIX reacting, it doesn't always react so strongly, even a decline of 250 Dow points, 25 S&P. But if you're a trader, it's more than just that. It's a complete revision of the growth across the entire Eurozone. That's a little bit worrisome when you talk about your volatility premium that you're going to price into those products.
They're putting on insurance,
Exactly.
no doubt.
Exactly.
So Kroger came out with
boy.
numbers this morning. That's getting hit, down 370. Wow,
Oh, boy.
That is a hit. Holy cow. Let's look at this longer.
Amazon's licking their chops for their, what do they have, $120 billion in revenue yearly or something we looked at? Uh-oh.
So let's see. They tumbled the most of the year after its holiday period performance and full year expectation disappointed investors.
Yeah, so let's see. They see full year profit in a range of $215 to $225 a share. Estimate had been $228. Fourth quarter revenue also fell short of estimates. Key takeaways, let's see. They're lowering prices, remodeling about 1,000 stores, working on their e-commerce operations to boost growth. Well, that's fantastic, but what else is going on, right?
Seriously, man.
Let's see, yeah. Yeah.
They're just looking at, you're down a little and Amazon's coming in your space.
I agree.
Yeah.
I mean, and the revenue numbers again, man. This is where Amazon is brilliant in that they see industries with huge potential that are ripe for innovation, growth, just competition, no matter what.
And Bezos he started in a business that the spreads are as bad, and his business that wasn't this. So he knows how to make money with spreads that are narrow.
He was going to sell books, you know. I mean,
exactly.
Right. And
121 billion.
The grocery, because it's so competitive, is razor thin margins. But what is Amazon great at, man? Not even caring about margins in the beginning, right? And they can almost be a loss leader for all their cash flow they have coming in, and that's a scary notion when you have a giant that's going to be a loss leader coming into an industry. $120 billion a year in revenue. That's an industry they like.
And what's going to happen now, folks, is Amazon's going to leverage. They're going to end up being one of the biggest box stores out there. This is what's going to be really weird. They go from digital down to box, but those box stores are going to be selling things. They're going to be warehouses for them.
Sure.
It's going to be the distribution system.
Sure,
you know?
right.
Natural gas.
Yeah, no, before we jump to it, I was just going to, we saw this one just pop
Tesla.
up, right? Let's see how, so they don't know where it will build their Model Y, and I believe that's March 14th they're rolling out. Is that a week from today? It is. That's probably where we're getting it.
It's the only stock up, so I don't know what's going on with this. This is wild.
Yeah, and let's just jump over to the chart real quick to see if this is, because this just hit the kind of the wires, that story. No, not too dramatic. Yeah, so I don't know where CNBC got this. We'll have to check because Tesla's actually up 1.9%. Maybe that's having more layoffs or whatnot. Yeah, I don't know. That company, it can do just about anything regardless of the news, right?
It can.
Yeah.
It can.
Okay, so yes, it is Thursday. We get our natural gas inventory numbers. I'm going to jump in here, jump into our natural gas contract. Let's see where we're trading. Started off with maybe our noons. Looking at the April contract. You got natural gas trading at 286. Quite a little run this morning from 281. Yeah, up to 286. Some cold hitting the country right now, maybe. Some cold hitting a little Florida in context of everything. Okay, so 286. I jumped to the noons first. We tend to like taking a look at the noons. It gives us an hour and a half. We have 285 as a price point.
Well, that's good.
Not bad, right? Yeah. So we'd have about a penny of intrinsic value to the bullish side. Here's your bullish spread. That's going to be the expensive one because you have some value plus premium. So you're looking at $19 to the bullish side. Of that 19, about 10 of that dollars is intrinsic value because you're trading at 286. And then on the bearish side, it's going to be all premium. No intrinsic, so you're just paying the 9 in premium. So you're looking at about $28. Call it $30 that you need to make with commissions, a buck on each side.
Okay.
And you need about 3 pennies away from 285 before noon to get to kind of your break even on either side. Jumping around real quick, let's see where the 230s line up. Not really going to be a great option. We have 280 if you want really volatility on both sides, and the dailies, pretty similar to 280. Now just checking the 11 a.m.s. because we saw what the noons were going to cost us, right? Here's your bullish spread, about 14. Your bearish spread, about 8, so 22, 23. You know, so you'd have to ask yourself, do I want to pay 2 pennies, maybe a little bit more than 2 pennies to have exposure till 11? Or do I want to pay maybe 3 pennies in total to have exposure? Just to kind of generalize. And that's where, you know, you just pick up your market bias. Say, you know what? I'm going to let this thing ride between 10 and 11 maybe. We'll see what happens. It's quite a number for oil yesterday, right? 7 million barrel build. And the market shakes it off and trades higher.
And then it ended up in the negative.
Did it? Okay.
Yeah. Okay, so look at this. Is quite a move, man. Look at this chart. You know, this is.
What's amazing too, this chart, this doesn't even include the craziness that happened. Going up to 410 and whatnot.
Yeah. So. This is not a bad-looking chart. Let's go here. Can you bring that back? Because
yes.
Yeah, 280. That's saying to me that it wants to go higher. So,
higher, huh? Okay.
Yeah.
Now here's, you know, just so we did all, and what's nice here is that you do have the penny of intrinsic value on your side, right? So that's nice. You have a head start to the bullish side. Really, to break even, you only got to trade up, if you do the noon, 3 pennies. You got a penny head start.
Okay.
But we always look at just some of the directional. So, you know, that's just a straight volatility. But what if you just want to go directionally? Number one, you always have, you know, some of the noons, whereas you don't need to cover yourself on the bearish side if that's what you're doing. You can just lock in the 18, right? Then you're basically buying it at 286.8.
Yeah.
The market's trading at 285.8. So you're paying 1 penny.
That's pretty cool.
For a risk reward of basically risking 1 to make 10.
Yeah.
Now, you need a 20-cent run. You're not going to get a 20-cent run before noon to 305, all right? Not, 999 times out of 1,000 you won't. But you could, and you could get a run up to 290 or 295, for sure, before, depending on what happens. But the other side, too, if you want the dailies, and this is where it's not bad. We kind of dismiss them if it's a volatility trade. Excuse me, those are the noons. But if you're just entering it for a directional trade, this is a great example. Now, you have risk all the way down to 280, which is a lot of risk.
That's a lot of risk.
It is.
Right.
But you can always trade out of this, too.
No, I know.
And you're getting in at 286.3.
I like the penny risk.
And the market's at 286. I just want to illustrate, you're paying 0.4 of a penny here. 0.3 of a penny here in premium. And you can trade out of it. So we'll see. 286. We get those numbers when we come back.
Stay right there, folks. Our phone number is 877-927-6648. Dow Industrials right now down 276. NASDAQ up 75. S&P's down 24. Come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas stockpiles fell 149 BCF. It's going to be interesting to see what happened here because that's what they were thinking, right?
Pretty close, right? Yeah. You had a Bloomberg survey, minus 150, median estimate, minus 145.
Yeah.
Jumping back to the charts, and no real reaction. We're sitting at 285.5. We were sitting at just about 286 coming into that number. That is a tiny bar in terms of when that number usually breaks. We usually see a knee jerk one way or the other no matter what happens in terms of a penny maybe 2 pennies. People sometimes, not that you pull your bid and your offer, right? But you make sure you know what news is going on before you just have your offer sitting out there. So you can see that market jump around as those bids and offers right next to the market dry up, just as they wait for that number as we do. 285.7, we'll check back in, but no real movement just yet. And that's why, you know, when you lock in some of these defined risks, you know, if you're not paying a lot of premium, that's the benefit, that, you know, you get no movement, you're not really losing any money, right?
Right.
That's what you have to examine as these. But as we say that, ticking down, we're down about a penny, 285. We'll see what happens. Yeah.
Let's go take a look at the NDX and see the strength versus the weakness inside here. So this is pretty wild. The leader's Tesla, folks. That's up 2.7%, $7. Delta Airlines, Dollar Tree is up 1.6%. Electronic Arts is up 1.3%. Now, taken away from it, look at
big numbers on that side.
Yeah, C-Trip, which was up the other, that was
I believe
the
you're
other
right.
day.
Is that the China air travel, hotel, kind of like Priceline? Or, yeah.
That's down 5%. You get JD.com down 4%. You get Western Digital down 3.9, and Win is off 3.1.
I wonder if those C-Trip will get, but that could have, you know, travel, hotel stay. You have a huge economic shift to the downside. Maybe they're a little worried on top of maybe what's going on.
Yeah, so let's take a look at that.
Yeah, so.
Yeah, that was quite a pop.
It was.
So,
and I would say this, it's saying they're fine, but they might face a little headwind with Eurozone dying down, and guess what? Maybe it popped a little much for our taste.
So let's go take a look at some of the. Actually, I want to go look at the IWM, because that move. Let's see. So you guys down 8 million. Yeah, you're gonna have big volume today too. Then 8 million is huge already for the IWM. We did 29 million. What happens with the IWM as well as the GDX is you get big volume in at the close.
Oh yeah. It's not every day. Not to keep bringing it up, but you get the. You know, European central banks saying we're going to grow half as much as we thought 2 months ago. As in the volume, this is going to be a big day across the board as people, you know, we were just down 300, we're down 250. We're going to be jumping around here.
Oh, yeah.
Yeah.
And we get over to the 30-year, we take a look at the 30-year. Look at this thing. It's picking its head up. Already 147,000 contracts. That is big contract volume, folks.
Yeah.
This thing, you know, normally does 300. 300 is big for the 30-year.
No, right.
You know, you're going
just Tuesday. We didn't. Sorry, go ahead. Yeah.
You're going into 377, but this wants to go for it again. Go for the gusto. So, the 10. We go look at the 10. 10's up. Oh, I'm on H now. TYM.
June 19 already.
Yep. Pretty intense.
It is pretty intense.
Look at that move by the 10. We're already at 924,000. This is a big move. This is a big move, man.
Yeah, I was going to admit, we're almost at the volume we were at 2 days ago for the whole day.
Yes.
In terms of Tuesday's volume, you can see it on the chart. It's like, wow.
Yep. And if we take a look at the 2.65.
Yep.
And the last 12 months, look at that. 2.553 is the low. 3.2. 3.2 seems so far away now.
It sure does, man.
You know, particularly when you start looking at Europe, though. Look at these rates in Europe. I mean, there's just no interest there.
I mean, you almost.
Okay, so Switzerland's still negative.
Okay. That's right. You almost open your site. It's almost not that it's a currency trade, right? But if you're taking any type of currency and you're putting it in those types of vehicles, it becomes a currency trade because you better be able to repay it in that currency.
Yeah.
For sure. I mean, that's why I say it's almost like not a store of wealth, but it becomes one when you're getting so little money on your investment, where it's just kind of stored in that currency, and they're guaranteeing they're going to give it back to you at that value.
And that's why gold's probably not getting killed.
Yeah.
That's the other thing. You know, that's
factoring in for sure.
I could see that.
For sure.
You know, if we go to look at the GDX, GDX out here, bottom line, you know, it's up 16 cents. You know, you're going to need some more volume, but 9 million is not bad for an hour into the marketplace. So if we, just about an hour.
Yep.
That's not a bad setup there.
I'm just going to go back over. We were looking at those Tesla details at the break, so pretty interesting in terms of what this is. And I think this is just a CNBC article that just came out, all right? So 7 minutes ago when I pulled it up, and I think it's just one of their own scoops. So what they talk about is now they have the first unveiling of their SUV 1 week from today. They talk about that they don't know yet, and this is according to 6 current and former employees, that despite the fact that they're planning to formally unveil the vehicle for the first time on the 14th, they don't know where they're going to make it yet. And they have a pretty substantial difference in terms of what they're trying to figure out. And where was the article? Yeah. So wavering between 2 options. They're trying to decide whether they should allocate space in the Gigafactory, their massive battery plant outside of Reno, or they're going to combine the Model S and Model X body lines at its plant in Fremont, California, to make room to build the crossover SUVs. I mean, that's a huge difference only because the Gigafactory is all about batteries, man.
Right.
So you're going to take up space in this thing that you've been touting forever about batteries is the future. We're going to dominate it. And guess what? We're going to take up some of that space and we're going to make cars in it now. I don't know. Just pretty substantial for the market to shake it off in no time. Yeah, so we'll see what happens, man.
And then the number here, one of the big numbers was that
down here.
SUVs in general, right?
Yeah. So according to forecasts, just the whole industry, SUVs are expected to comprise 50% of all car sales in the U.S. by next year, up from only a third in 2013.
7 years ago. I know.
So you had 3 out of 10 cars being SUVs, 5 out of 10, 7 out of being anything else. And now you're going to have 5 out of 10 being SUVs. And I mean, it's just a huge, huge, huge shift.
Really.
To deal in percentages in the same way, right? You go from 3 out of 10 to 5 out of 10. That's a 66% increase in the amount of people buying SUVs over 7 years. When it's just such a huge industry to have that huge shift. You're talking about tens, hundreds of thousands of cars coming into that.
Gonna need bigger parking spots.
Yeah, bigger everything, I guess, man. But, you know, hey, why not? Gas prices have been relatively low for a very long time. Everyone's very, very comfortable with that price that they'd be paying, not worrying about having to pay $4, $4.50 in their gas guzzler anymore.
Yeah, that's for sure.
Oh.
Inside the Dow Industrials, strength versus the weakness, Boeing, of course. Yeah, Boeing putting 46 negative points, Goldman 21, 3M 21, United held 16. The only 2 that are positive, folks, you get ExxonMobil, which got killed yesterday.
Yeah.
Got 3 positive points, Verizon has 1.
Okay.
Yeah, so we take a look at this, how this is set up. And yeah, it's quite a move.
Oh, definitely.
You get some spread. Yeah. Let's see. 25,430. Yeah, you just jumped under this other little swing from February 6th also.
Yeah.
So you get some action on the way down, folks. Dow Industrials right now trading down 256. Nasdaq's off 72. S&P's down 22. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 281. You get the NASDAQ off 83. S&P's down 25. Let's go over to our man, Mr. Jack Gleason from MajorLeagueTrading.com. I think he's got that surfboard out, and I think a couple of the, instead of sharks biting him out here, I think a couple of bears are biting him.
Oh, boy.
Jack Gleason.
I wish, guys.
What's
I'm back
going
in Chicago.
on?
I wish. I'm back in Chicago, man.
Oh, you're back in Chicago.
I'm dropping a tear for you, man. Oh, my goodness.
Why'd
They
you
kicked
leave?
me out of Costa Rica.
Oh, no. Why'd you leave so early?
I was only there for 4 months, and I definitely should have stayed for 6. No, last weekend, actually, when you guys called me, I was at a volcano. Yeah, but yeah, I am back in Chicago, and I am not happy about it.
Oh, that is too
Man,
funny,
that
man.
was an incredibly quick 4 weeks, 4 months. That
Wow.
is mine.
Yeah, it flew. It absolutely
I bet it flew for you because I can't believe it, man.
Well, the markets, of course, it was like I was thinking, yeah, maybe we'll get some calm markets. Of course, it's probably been the craziest market volatility-wise that I've ever traded. And I've been like trading for 10 years. I mean, obviously, when I first started learning, it's not exactly to the extent that I do now, but it almost seems like every Thursday you guys call, there's a crazy move. Once again, there is, big moves here today. I'm short some NASDAQ futures from the overnight session, so I'm having a good day myself. I got supports coming in at 70.20, but one of the things I really wanted to go over with you guys here today is just the S&P on a daily chart. Just because, if you really look at this market, this is the first break we've had since the uptrend has begun. We have not had more than 2 consecutive days down since the lows of December. Was December
26th. Yeah, right.
Yeah, depending on if you got the extended session turned on or off, or
Right.
But so we're looking what's like going to be now our 4th day to close with a new low, or lower than the previous close. So a couple levels that I think everybody just needs to be aware of if this selling continues, where we could go. And there's 2 things I'm watching that are deeper pullbacks. It's the halfway back for the year. Which the low of the year right now is on the 4th of January. And that low to high, believe it or not, the halfway back is going to be all the way at 26 quarter. Now, I do think that will trade at some point this year. The halfway back for the year will trade at some point this year, whether that's right now or in 3 months or in, right before I do not know. But that 26 really lines up well with the consolidation period of the last week of January before this leg up that really began on 29th.
Right. Yeah.
So that's a really important level. I don't know if we'll get down there, but it's something that maybe could be a gravity zone moving forward. And then, of course, the full halfway back long, which would be, I think, a little bit of a deeper pullback. That's going to be something everybody's looking at, and that's at 25.68, using the low of 23.16 from the 26th of December. So
Cool.
That's what I have for that. And then as far as if you go to an hourly chart of the S&P 500, and you look at, so we had that gap up open Sunday night, and that gap up open Sunday night made a new high. I believe it was in the S&P and the NASDAQ both made new highs. Russell and the Dow did not. But from that high of the open of Sunday night to the swing low of Monday, when volatility truly picked up, I think we had like a 52-point range. The 10-day lead was like 23. So we just doubled the range. Volatility picked up, and that high to low had a halfway back short. That 50% retracement was 27.93. That traded on the close of Monday, consolidated all day sideways Tuesday, and then we have completed those targets here. So during the day, if we're going to continue to go straight down, the low of Monday drawn to the current low should act as our resistance. Other than that, you want to take the high of Tuesday and then draw that to the current low. That's 27.70, and that would be the next major resistance level I would look above to potentially load up on a short position. So I know that's all an earful, but that's what I got for you guys.
That's clean. That's clear.
Yeah.
There's no doubt. There's no doubt. And, bottom line is that those small caps, how about those small caps yesterday? They got smoked. They started this baby down.
Oh, yeah. And you know what they started? They started to move down, really when we sold off last year.
September. Yeah. They topped out September 21st, where the market topped out October 3rd, right? Yeah.
It's been a big sell-off. For support levels in the Russell, I'm looking at, I got a 1510 and a 1482 are the two spots I'm looking at. 1510 and 1482 are the next two levels below. But shorts are on deck really for the first time. I mean, you can take little trades here and there short, but for the first time in a long time, they worked well yesterday and today, which we haven't seen. So
no, we haven't seen that follow through. Right? It's kind of intriguing. Yeah.
And how about gold, guys? What happened there? I thought you guys told me you were going to keep the market bid.
And, it blows. Well, look at this. It's blowing my mind that the dollar just broke its highs and gold's only down 20 cents.
Yeah,
they're still buying it.
Yeah, they're still buying it. There's always a floor in there somewhere, right? Yeah.
I mean, it looks to me like it's more than a floor, because it's like, this is really unusual that you can have the dollar at highs and they can't whack gold. You know what I mean? I mean, it's down from the high that we go back to February 28th, 1349. I understand that, but it's like, it should be a lot lower, man.
Yeah, you're right. You're right about that. I mean, we're really checking back into the 25th of January. That's when that breakout began. Yes. We had a 24.5-point range there on the 25th, and I think that really was the low and the base of the entire year. So this should act as support. What I wouldn't be surprised to see is just a little crack below the lows of the year, down to maybe like 1272 area, just enough to scare some people, take them out, and then reverse back above. So that would be a potential trade I would look for, is the break below the lows of the year, down to the 1272 area, and then the trade trigger for me would be a move back above. So that's something I'm going to...
No, that makes sense. They like spiking it down. Well, it's going to be interesting to see in the dollar today, the index itself, is that if this is just going to be a spike higher, because you know that, I think it's 96,195 was the number. No, 97,195.
Okay, it's a high from December 14th.
Yeah, and we'll see whether, it's going to hold it or not. We blew by it.
And 97,230, that's the high of February 15th.
Oh, so that's the high then, huh?
Yeah.
Okay, so it's
I'm just looking at this dollar chart. So that was off the ECB press conference.
Yeah.
The Eurozone's not going to grow this year, Jack. It's not happening. 1.1%, not 1.7.
Good thing I don't spend too much time vacationing over there, no.
Yeah, just stick to the islands, man. Just stick to those beaches. I do too, man. That's why we live in Florida.
That was a quick 4 months.
That's amazing.
That is amazing.
We had the build-up where you were going over there, man. Then we had the first show. We're going back 6 months, a year, man.
That's
Time
crazy.
is crazy, man. Time is crazy.
I know. It was so chaotic. I mean, just everything. I mean, my internet was not working half the time, which was okay, because then I just go to the beach, and it's just like, and my landlord asked me, he's like, "You gonna be back next year?" I'm like, yeah, probably.
Yeah.
Perfect.
Okay, man. Well, listen. We welcome home. Stay warm. It'll warm up in another
Spring's
60,
almost here.
60, 90 days in Chicago. You might get to 50.
I wish.
Okay, man. Have a great one. Have a safe one, Jack.
Take care, guys.
Thanks,
Later.
Jack.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down at 246, NASDAQ up 65, S&P down 21. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if you come over to our website at TFNN, folks, you're going to see our man, Mr. Nico DeHaan. He has a great newsletter. We're going to keep you healthy.
That's right.
And health is everything. You know, you can have bread, you can have whatever you want. If you're not healthy, you're done.
And you make better decisions in life and everything in terms of trading. You know, you see a lot of people in terms of mindfulness. You know, you got to take care of your body, you take care of your mind, you think clearly. So Health Signals, Nico, twice monthly newsletter. Comes out on the 1st and the 15th, and this sale runs through Sunday. It is Thursday now. I encourage people to check it out. You can sign up for as little as $7.50, because that's what's going on in terms of, normally it's $10 a month, $49 for 6 months, $85 for a year. All you have to do, it's Health Signals. You're going to enter promo code HEALTH when you check out.
Okay.
If you just want to try the month, you can try it at 10. You save 25%. You're only going to get charged $7.50. For that. He's got a bunch of great archive issues you immediately gain access to. That's not like a stock newsletter where it's old information. They're all great information about your health. And then, you know, I encourage people to really go for the year. $85 because you're going to get that 25% off whatever subscription length you choose on the first payment, and you just enter that health at the promo code, add it, just that simple. It's going to take off that 25%. You're only paying $63.75 for a whole month. You're talking about 24 issues.
For a year, right?
Excuse me, for a year,
Right.
yeah.
Right.
So that ends Sunday. Check it out on the front page of TFNN.com, Health Signals. And you can also get Primal Edge. We talk about it as well. A little bit more suited for people really looking for that daily vitamin, but same thing. Directions right here, just for Primal. Use promo code PRIMAL at checkout, and you're going to save 25% off your first month. Normally it's $89. Same deal. Enter that code. And one final check, natural gas, not too much, man.
284. We started at 286, I think.
We did. So we'll see.
Stay right there, folks. We got a fast market coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get them, folks.